It's called the Experian Cash Flow Score. They're going to be using your bank transaction data for smarter lending. Okay. So listen, I'm going to break all of this down right now and how it's going to affect you and what you need to do and know about this. This is a time you need to take notes. Income, deposits, your spending patterns, overdrafts, recurring bills. Let me pause right here real quick. They know that you are getting items removed off of your credit report. It's not just for the new experience score. This is because Vantage Score 4.0 is going to be looking at trended data. FICO 10T is going to be looking at trended data. Experian says that your bank account is now a credit score. Okay, let's get right into today's information. All right, so here it is right here, guys. It's called the Experian Cash Flow Score. They're going to be using your bank transaction data for smarter lending. Okay, so listen, I'm going to break all of this down right now and how it's going to affect you and what you need to do and know about this right away. Okay, and by the way, guys, you guys can join my 850 Club Elite for free. All right. So you can either scan this QR code right here, or you can text the word credit to 708-346-5613 if you guys want to see some results like this, where credit scores are going up every single day inside the Elite. And go ahead and learn more about that. That's a 7-day free trial. Let's get right into it. All right. So now, first things first, what just happened with Experian? Okay. So Experian just came out with a new scoring model. Now, I know what you guys are thinking. Well, just because Experian comes out with something, who's going to use it? Oh, don't worry. We're going to talk about that in a second. Okay. But they just introduced a new unified scoring model called the Experian Credit Plus Cash Flow Score. Okay. Now, this is revolutionary because it's coming directly from the Bureau. If you guys haven't been keeping up with what's been going on lately, banks are considering other options outside of just FICO. So, of course, we know Vantage Score is on the table, but now Experian is now getting into that mix as well too. So this is major news. Okay, it combines credit data with bank transaction data, and then alternative data into one score. It's going to be the same range, 300 to 850. Okay, so now what data is it going to use? It's going to use traditional credit report data. So your payment history, your utilization, your balances, and your inquiries. Okay. But what's now being added to it is going to be bank account activities. Okay. Income, deposits, your spending patterns, overdrafts, recurring bills. Let me pause right here real quick. Let me pause right here. They know that you are getting items removed off of your credit report. They know that that you're becoming an authorized user and is adding points, right? So they know that people are showing on paper 700. They know that people are showing on paper 750. They know that people are showing on paper 680. But has that person changed? And so they're going to still look at the credit score, but they're going to be, the data that we've always had that made the credit score, but they're going to go into like who you are as a person, how you're spending your money, how your money's coming in. Don't worry, it's going to get deeper than this, guys. We're just getting started. Now, they have alternative data coming from Clarity Services, which is non-traditional lenders, cash advance uses, and they're going to be looking at this over a 24-month behavior, not just a snapshot. And this is just Experian. I'm going to give you guys an update on Equifax in the next few days because Equifax, stay tuned for that. Okay, stay tuned for that. Next, why Experian created this. Millions of people have thin files or inconsistent credit histories. Lenders want deeper insight into real life cash flow behavior. Experian says that 40% of this is going to be an improvement in predicting credit risk compared to traditional models. They're trying to figure out why are so many 680s, 700s, 720s, 750s? Why are they defaulting? How are they late? How did they get approved for these high limit credit cards and they're not paying them? Because they know that some people, not all, some were really 500s and they bought their way there. They got things, and I'm not knocking this. But here's the thing. You can't go from a certain score, increase your score, and not change your habits. Okay, not change your habits. So again, this is why they're doing this, and this is the perfect time for them to do it because FICO is in hot water. All right, so let's keep going. Let's keep going. How are lenders going to use this? Personal loans, credit cards, auto loans, home equity line of credits, also known as HELOCs, mortgages, and lines of credit. This is going to help lenders see your real income consistency. They're not asking for bank statements. I want to be clear. They may ask for check stubs when you go apply for not auto loan, mortgage. That's normal, but they're going to want to see bank data where you're going to log in. Oh yeah, I told you guys this was happening with American Express. They started doing this 2 months ago. How people manage their checking accounts, their savings accounts, whether spending matches the income. If someone is trending up or down financially, they're not playing with you anymore. What this means for consumers. And please, guys, let me know your thoughts in the comment section below. I also been having some internet issues. Let me know if this is coming out choppy. Please let me know if this is coming out choppy, okay? Either way, your bank account behavior now matters. Overdrafts, bounce payments, fees, and inconsistent balances will now hurt you being approved, not just your credit score anymore. A strong cash flow can help someone with a thin or recovering credit file. What's a strong cash flow? It's not the number. It's the difference between your bills and what's left over. Again, it's not the number because there are a lot of people who are broke at a high level. They're making six figures. They're making 500,000, 100,000, but then they're spending 102,000. So it doesn't matter about the amount coming in per se. It's the difference between the two. Okay. So people who improve their habits over time will look better under trended data. Stay with me. Stay with me. By the way, I know we got a lot more people in here than when we just started. I got to let you know, you can join my 850 Club Elite today for free. Okay. You can scan this QR code or you can text 708. You can text the word credit to 708-346-5613 if you want to get results like this, guys. Okay. Credit scores are going up every day inside the Elite. Let's keep going. I'm not done yet. Who benefits the most from this? First-time home buyers with limited credit history. People rebuilding after collections, charge-offs, even bankruptcies too. I forgot to add that. High income earners with bad credit, but strong cash flow. Y'all hear this? They're going to benefit now. Even if your credit's not the best, but your income is coming in and you got a difference between what's coming in and what you're spending, you're now going to be in a better position. You guys hearing this? Let me know your thoughts in the comment. As I'm talking, please let me know your thoughts in the comments. Consumers using non-traditional financial services. We're going to get into that. Okay. Now, who might get hurt from this? Who might get hurt? People with unstable income or inconsistent bank balances. What's unstable income? When you working a job, then you leave a job. You got a side hustle, you playing around with it. It comes in, it don't come in. That's unstable income. They want people to say, hey, how long you been working at your job? It doesn't matter if you just got a brand new job. It doesn't matter if you've been at a new job every year. They at least want to see a good like stable is 6 months or more, preferably 2 years or more, but they know people are looking for different types of industries. That's okay. The biggest thing is going to be inconsistent bank balances. Inconsistent bank balances. Okay. They're going to be looking for. Now, what's an inconsistent bank balance? That means that they're expecting to see some money left into your account. Okay. Money into your account, money left over, the difference, not just always going down to zero. Okay. Now, again, this just came out. We don't know who's going to use it yet. So I'll keep you guys posted on this, but it's now becoming an option. Are you guys hearing this? Okay. Those who rely heavily on overdraft protection. So if you're always overdrafting, what does always mean? Always doesn't really mean always. But if you're overdrafting a few times a week, that's going to be a problem. If you're drafting more than once or twice a month, that's going to be a problem. Consumers who only fix their credit right before applying for something is not going to fly anymore. Y'all know the CFPB is not, just so you guys know, y'all saw my video the other day. For everybody that's been using the Consumer Financial Protection Bureau to try to get things removed off their credit report, the Consumer Financial Protection Bureau is running out of funding. They don't have any more funding. They won't make it to the end. They won't make it past December, they said. Just giving you guys that update if you guys didn't watch the video. Let's keep going. What lenders will see now? Average monthly income. They're going to see how much money you're making. For years we said, how much money you make is not going to be on your credit report. It's not on your credit report. But they still can use that data to say, hey, this is the score we're using. So that means they're going to run your credit. And here, let me break down to you real quick so I can let you guys know behind the scenes. I'm a real estate agent. I also worked 6 years in the auto industry. How it works is when they buy these softwares, every dealership can buy their own software. There's no dealership that's forced to use one bureau, two bureau, three bureaus. I've seen some dealerships use two bureaus. My point is they buy the software that pulls the credit. No one has a direct relationship with the bureaus. They buy software that has a relationship with the bureaus. So when they sell the dealership the package, it's going to say, hey, here's your standard 3 credit scores or whatever you want to buy. However, this is the new Experian score that they're now selling. This is going to give the banks a better insight. We're going to guarantee we know their income. Average daily balance, overdraft frequency, recurring bills, and whether they're paid on time. How much discretionary money is left after bills? 24-month credit trends improving or slipping. Why does this sound familiar? Because a little bit of this is FICO 10, FICO 10T. Y'all see that? But see, here's the thing though. If y'all didn't recognize, FICO's having some issues. I gotta give you guys another video on that, man. I gotta give you guys another video on that. All right, so now let's keep going. Action steps to prepare. If you don't take any notes tonight, this is the time you need to take notes. Okay. Keep at least 1 month of expenses in your checking account if you can. I know everybody's money's tight. This is not something you got to do tomorrow. This is not something you need to do next month. This is something you need to prepare for around about next year. It's not just for the new Experian score. This is because Vantage Score 4.0 is going to be looking at trended data. FICO 10T is going to be looking at trended data. Now, again, those credit scores are out, but they will press them hard next year. Okay, they're going to press them hard. I'm telling you, I will keep you posted. Avoid overdrafts for 90 days minimum. Okay, how do you do that? Spend what you have, put things on auto pay if you got it. Pay bills from one primary account to show stability. Reduce unnecessary subscriptions and fees. Show consistent deposits, especially if you are self-employed. Okay. Build at least 2 to 3 positive accounts if your credit file is thin. If you don't know where to start, listen, I got a solution for you. Don't worry. Track your trended utilization for the next 90 days. Okay. Now, again, just because this is out, we got to prepare for it. This is not something that's going to start tomorrow. This is already out. I want to tell everybody again, this is already available. They are going to be selling this now. Banks, financial institutions, credit unions, they're not forced to use FICO. I want to be clear. So I'll give you an example. In Chicago, you have a choice between, I don't know if that's the best example, but I'll give you another example. For years, since the 1980s, FICO has always been providing the credit score. It's not that they were forced to use it. Nobody else came out with something. Vantage Score came out in the 2000s. They didn't take it seriously. Now, because FICO increased their prices, they're like, hey, we need to look at some other options here. That's why they've been testing Vantage Score 3.0 and 4.0 for the past 12 to 16 months. I've been telling you guys this. So people been cracking jokes saying, oh no, that's just your Credit Karma score. That don't matter. People that don't people that are not in the real estate industry, people that are not behind the scenes in banking, lenders, mortgage lenders, am I right or wrong? People in the car industry behind the scenes. These are conversations that's happening. These are changes that's happening. Y'all better listen. Cash flow behavior is becoming a key approval factor. Underwriting is shifting away from one static credit score. That's it. This model may become standard across lenders starting in 2025. I doubt it's 2025, but since they came out with it today, I just don't see around the holiday season banks changing changing things so quickly, training their team and staff. I don't see it happening in December, but Experian is making dials. They are pushing this. I'm telling you. But again, I would say 2026. Consumers need to prepare or risk being left behind. How can we prepare? I'm gonna tell you that in a hot second. Number one, when we're applying for things. Now, here's the thing: when you're applying for a credit card, you don't know what they're pulling. But when you're about to go to the dealership, when you're about to apply for a personal loan, maybe not even a personal loan, unless you're walking inside the bank, a mortgage, you need to ask them, what credit score are you using? What algorithm are you using? Don't stop assuming. Now, between now and next month, I don't think it's gonna be. I honestly don't see that happening. But at the beginning of the year, start. If you say, "Listen, I'm about to start the home buying process," ask the lender what credit score are they looking at. It's not just FICO anymore, guys. I'm telling you. I am telling you this. Okay. Now here, check this out. We got some new people in. I want to make sure you guys know this. If you don't have a strategy, if you need a strategy, if your credit score isn't where it needs to be, you can learn more about the 850 Club Elite today. Scan the QR code right there on your screen or text the word credit to 708-346-5613.